And we're back. Let's get some music going. Some music. Dun, 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 dun. Let's go with the. Let's go with. Sure. Oh wait, it's about to play through the speakers. There we go. All right, market hasn't done a whole lot since I was last live. Gold swept out all-time highs, sold off immediately after. That's about a 40, that's like a 50-point sell-off on gold right there in about 15 minutes. So we'll see. Daily candle is still pretty bullish, but I don't know if we're going to get another pop above 5,300. NASDAQ. This daily candle is not looking too great right now, so we'll see what happens there. VWAP on the daily sitting around 26,200. 15-minute chart looking like she wants to drop. Could be a bear flag that we're putting in here. We'll see. We got the FOMC rate decision coming out in 13 minutes. And then Jerome Powell is going to be going on at 11:30. So we'll be live for that. We're going to see his tone during the meeting. See what the Fed has planned for the rest of the year. There is a pretty big chance that we're not going to get an interest rate cut today, which is what it is. I mean, the data is saying what the data is saying. So if they don't want to cut rates, nothing we can do about it. All we can do is react. But the way that price has been moving today, I would imagine that FOMC is going to cause a big spike in volume, and then it's just going to kind of fizzle out the rest of the day. So we might push back to the highs, but I'm not banking on it. I got a couple evals I'm running with Tradeify. I'm not going to be trading the funded accounts for this. That would just be kind of stupid. So I am willing to risk some evals though, just for entertainment purposes only. There's just no volume in the market right now, which is to be expected. I mean, obviously we have this rate decision coming out in 12 minutes, so the market ain't going to go nowhere until that happens. Once we get the rate decision, I'm sure there's going to be a spike in volume, and then it's going to fizzle out until Jerome Powell comes on 30 minutes later. So, but depending on what the rate decision is, if we do get that decrease, NASDAQ's definitely going up. If we get a pause, then probably not much is going to happen. But we're ready for anything. Let's take a look at ES futures. ES futures sitting right at this pivot point. So ES is honestly in a better area of support than NASDAQ right now. ES just bouncing right off this pivot point. NASDAQ sitting below. That pivot point's right about 26,180. NASDAQ is just hanging out right at 7,000. So, sorry, not NASDAQ. ES is sitting right at 7,000. So, yeah, ES is definitely looking like it's at a stronger area of support, where if it breaks, could see some serious follow through. NASDAQ kind of took a couple bounces off prior day high at 26,120-ish. And right now it's holding above that. So we'll see what happens. 10 minutes. 10 minutes till we get the decision. Honestly, wouldn't have been a terrible idea to try to buy off of this double bottom earlier and then hold it through the rate decision, because if we get that bullish move, that'd be some serious profit. And then if it comes back down, obviously you have a lot of wiggle room to cut the trade off. But that's all hindsight, so just saying what I'm seeing. We got the Federal Reserve YouTube channel loaded up, ready for this press conference at 11:30. Market's not really doing anything right now, so we just gotta sit on our hands. Gold rejecting that pivot point again at the 280s. But if we go to the 1 minute chart, I mean, just absolutely no volume. Look at these gaps on these 1 minute candles. Just not really a good spot to be trading right now. So once we get some of that volume come in, then we might have something to talk about. But a lot of the volume on gold has been traded in the overnight sessions. We had a big pump up yesterday into the close. But, I mean, look at these moves overnight, right? Pump up, chop around all day, sell off, pump up, chop around all day, big pump up at the close. Some movement overnight, kind of just chopping around all day. So here's a nice move up during the day. So really kind of got to be a sniper on gold in order to profit, but we'll see what happens. We are at some serious all-time highs. Let's take a look at the weekly candle. Weekly candle on gold. Oops, that's the monthly. Yeah, still very bullish on the weekly chart. Opened up this week, we're at right around 5,000. Topped out at highs of about 325. So very strong move, 300 points. If you were a gold swing trader, that'd be what? $30,000 a contract, I think. Yeah. One contract on gold this week, $30,000. Of course, if you're able to swing trade. But someone did it. I know someone out there did it. 6 minutes. 6 minutes. Let's see. Fed rate decision real time. Brother. All right. So, Fed funds interest rate is currently 3.75%. So if we get a 25 basis point cut, that would bring us down to 3.5. We held at 4.5 for a while. We got one cut in September, one cut in October, and actually, is this 2 cuts in October? What am I looking at here? Oh, no, sorry, this is December. This date format is messing me up. So 1 cut in September. Let me get rid of that. 1 cut in October and 1 cut in December. So are we going to cut again? Not sure. This is what we're looking at here. January 28th, 2026. So I'm going to pull the charts back up. I'll put this on my other monitor so I can keep some tabs on it. We got about 2.5 minutes. FOMC day, exciting stuff. NASDAQ pushing up off the lows already. So this could be the recovery we're looking for this daily candle. Get some more bullish momentum back into this daily candle. Close it back up towards the highs. Then maybe we get some extra push up the rest of the week. But if not, we're probably coming back down for this range here. I could honestly even see the market pushing up through the close and then big sell-off Thursday and Friday. A lot of stuff could happen based off of how, 1, this rate decision comes out, and then 2, how Jerome Powell is during the speech. So he could honestly say a whole lot of nothing, too. Kind of got to pee. I shouldn't have drank a whole Sprite before this. I just had breakfast. I don't want to leave the charts, though. All right, 1 minute. Let's see if we reject this pivot. I'm going to leave the 5-minute chart up. So low of day is right about 26,100. So we're about 75 points off of low of day right now. Ten seconds. 3, 2, 1. Whole lot of nothing. Alright, there's a little push up. Gold is attempting to come back up. Still just very low volume. Let me open up Webull. I'm not seeing any updates. There goes gold coming for that low. Again, we're on the evaluation account right now. See what we can lock in here. Looks like it's going red. Tried to catch a bounce off that low there. It worked for a second, but it's coming back down here. We'll see what happens. NASDAQ just came for that low, taking a bounce. Gold is not looking too great off this low anymore. We'll see how this 5-minute candle closes. NASDAQ came right for that prior day high. Pretty clean bounce off that level. May end up just cutting this gold off. All right, there's 1100. Should we just cut it off at, whoa, 280? Hold on a second. Let's see if this candle's gonna flip red. That was a pretty big gap up on the 1 minute. I don't know why this candle is still printing green when it's clearly moving down. Whole lot of nothing going on right now. Honestly, I'm gonna just put a limit order in, and if it takes me out there, cool. And then I'll wait for Jerome, my boy JP. All right, cool. So that was $1,000 locked in on gold on this evaluation. There's just not the volume that I was looking for off that rate decision. I don't know what the decision actually was. I'm assuming that they paused, obviously, because there was no super big increase in volume. Looking good, bro. Thank you. I appreciate it. Yeah, there's just really no spike in volume there. So I would say that was a real sniper entry, though, off that low. Let's go and look at the executions. Session disconnected. That was weird. So yeah, look at where that execution was, a little blue arrow. 267.6, and the low of this candle was 265.2. So not bad. Locked in $1,000 there. Again, these 1 minute candles are just not printing with any volume. So, and NASDAQ is pretty much stuck right here. So could it pump higher? Of course. Do I want to sit here holding and sweating while it's just bouncing up and down, back to break even, back to 1,000, back to break even, back to 1,000? Not really. So glad I was able to take it off at $1,000 in profit. I just wish there was a little bit more decision at the moment on which direction we're headed, but it's understandable that we're going to wait for the press conference, which is in about 22 minutes. And if it starts coming back down here to the VWAP, then I'm cool with that too. I would have gotten taken out either way. So glad I at least locked in some profit there. But yeah, these 1 minute candles are just no buyers or sellers anywhere to be found, except for on this candle. That was a pretty good sell-off, but stopped right at the low. So it's just hanging out right at this pivot point. I mean, that was a pretty good exit too, to be honest. Little 10-pointer. I'm not seeing any updates on the rate decision. Sorry about the background. I need to change this desktop background to something else. Let's see. Any updates on the search? Interest rate decision today. Okay, so here we go. On January 28th, 2026, the Federal Reserve held the federal funds interest rate steady at a range of 3.5 to 3.75, pausing after 3 consecutive cuts. So it was a split decision. Officials chose to pause to assess the impact of previous cuts, with some policymakers preferring to cut rates immediately due to employment concerns. The vote was not unanimous. Some officials favored a 25 basis point reduction. While the Fed noted the economy is solid, they acknowledged inflation remains above target. The decision suggests a wait-and-see approach for the coming months. Markets are pricing in 1 or 2 potential cuts later in 2026, likely around June and December. So, to be expected. Of course, that was definitely priced into the market, a rate pause. So, whole lot of nothing. I mean, I guess you could have caught like a 70-point move on NQ if you sold at these highs, but honestly, the best opportunity I saw really was gold off of this low. Could have held through all of that. It's pumping up now. Would be up about $2,000 on my position now. But what are you going to do? See if we reject this high here, or if we just blast right through it. Getting stuck. I wouldn't be surprised if JP is late to this press conference also. It's probably not going to start right at 11:30, so we'll probably have to wait a minute, I'm sure. I am interested to see what he says, though, because we're coming off of the news that he's being criminally investigated. And yeah, I'm interested to see his tone and sentiment in this meeting, because this is really the first time that we're going to be seeing him speak since he released that statement, the video statement explaining why these charges or this investigation was brought about, right? Not because of what they're doing with the budget and these additional buildings at the Federal Reserve, but because of his decision and his policy stance on the rate decisions. Obviously, we know Trump has wanted him to aggressively cut interest rates to sort of stimulate the economy, and he has not done that, to President Trump's dismay. So we'll see how he's looking during this meeting. If I were him, I would not be too happy, but that's just me. All right, there goes gold for a move up to 5,300. See if it gets there. Yeah. 67.6, and this candle came down to a low of 67.7. So honestly, this trade never would have gone into drawdown if I was still holding it, but that low volume just had me worried that we were going to get a big dump. You know, obviously it could have gone either way, right? A big green candle or a big red candle. But when I'm just sitting in a trade like that with no volume, I feel like something's coming, and if I'm involved on the wrong side of it, then not going to be good. So in this case, it would have worked out, but It won't happen like that every time. So about to tap into 5,300 here. So honestly, if I was still holding this trade, I would have just passed that eval. That would have been the $3,000 I needed. But I'm not going to let that affect my decisions the rest of the day. Just kind of a funny note. Right, I got in at 267 and we just peaked out at 298. That would have been 31 points, and I need $3,000 to pass, so that would have been about $3,100 with just one gold contract. There is some resistance sitting here at 5,300. Right, we had some trouble breaking through that area, ended up getting a spike and then a big sell-off after we swept out that high. So are we just going to come back up to 5,300 and then reject? Possibly. Or are we going to get some volume pumping in like we did yesterday? Yesterday was crazy at the end of the day. Yesterday, as soon as we broke 5,100, it was like off to the races. I mean, 5,100 straight up to 5,183. It's an 83-point rally on gold. Got about 13 minutes till Jerome Powell is live. Should we watch the statement from Jerome from a couple weeks ago?
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings.
This is quick. It's
It is
only
not
another
about
minute
Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
So that was that. That was that was put out 2 weeks ago. So I'm sure some people have seen that already. But yeah, I mean, basically he's just saying, look, we did everything on our end to make sure that Congress, or, the powers that be, were informed about what we were doing. Every decision in regards to the budget was approved, and we did everything right on our end. The only reason that now there's an issue with it is because we have decided not to cut interest rates as aggressively as this administration would like to see. So whether or not you see truth to that is, up for debate, I suppose. But the fact of the matter is he has one job to do, and that is stable employment and keeping the inflation rate at their target rate, right? Maximum employment and a stable economy. So if the data that the Federal Reserve is seeing does not support them cutting interest rates, then it's his job not to do that. Whether or not the president wants him to or not doesn't really matter. So it is kind of unfortunate to see this play out the way that it has. Wish the best for that guy. I'm sure that's not an easy job to do, but let's do this. What was the logic behind that last trade? I'll show you, just one second. Where did my... Oh, it's over here. So just kind of playing into the idea that we would have a bounce off of the lows here with gold. I would say, I guess it was a bit of a gamble. Obviously, we could have just come straight down through that level. But, the market is pricing in a pause already with the rates. So with that being priced in already, are we going to see some type of huge volume move based off of what the market is already expecting? Probably not, right? So we already had a 50-point sell-off from the highs on gold, retraced into the VWAP here. So I guess this was just kind of playing off the idea that this might be a bit of a manipulation, trying to get people to go short. And I took the opposite, right? I went long at the bottom, and it ended up working out in that case. Had it continued to sell off towards VWAP, I obviously would have had to cut it off for a loss, and this is an evaluation account. I definitely would not have taken that trade on my funded accounts. No way, sir. Like I said, these trades right now are just kind of entertainment purposes only. As you can see, this is the 1 minute chart on gold. There's just, coming into that, there was really no volume in this area. So when we came up right to this high, had a big sell off there back to the lows immediately. And I went ahead and snagged one contract, caught 10 points on it back to the pivot point, and then that was that. It would be nice if we could catch another trade, but we'll see. It's going to depend on my boy JP. Got about 6 minutes until this press conference starts. So, NASDAQ has already sold off pretty significantly today too. I don't know, I wouldn't say pretty significantly, but it has definitely lost its momentum if we're looking at the daily time frame. So, potentially whatever he says during this press conference could inspire some confidence back into buyers. If he starts hinting that the Federal Reserve is open to interest rate cuts the rest of 2026, then that might be something that buyers look at the market and they say, okay, cool, I'm willing to put some risk on until we come to that next decision. And when I say buyers, I'm talking about like big institutions that are actually going to move the markets, right? Not the retail traders that are just reacting to the moves. So if he starts saying things like, the Federal Reserve is open to cutting interest rates at the next FOMC meeting, then that is something that could incite some bullish sentiment and we start seeing a rally on the NASDAQ. But if he just kind of completely closes off to the idea of the Federal Reserve Committee cutting interest rates for the rest of 2026 based on the data that they're seeing, then that might, invoke a little bit of fear into the market where people want to start selling their positions. And we're kind of in a perfect spot on the higher time frames to do that, right? We kind of rallied all week up right below all-time highs. All-time highs on NASDAQ are right here. The all-time high is 26,640 about. And so we were about 300 points off of that at the peak today, or in the overnight session. And then we started selling off. So, whatever he says could get that last squeeze that we need to get to all-time highs. Or we could just go back right into this range that we've been trading in for literally months now, right? Let me get pivot points off. This is, my goodness, my eyes are hurting. Right, we've been trading in this range for months. And now we're kind of getting a break above, but still within the bounds, I would say. Right, if we're going to draw a line, we'll ignore this low here. Right, we're still kind of within the bounds of this range. So, I don't know. It's really just kind of a gamble on what's going to happen until he starts speaking. Would I be surprised if NASDAQ starts selling off now that we've tested this area? Not really. But I also would not be surprised if we hear something bullish during this conference and we start making a push towards all-time highs. So all we are here to do as traders is react to what the market is doing. So no point in trying to overly anticipate. There's no point in trying to go short here expecting some follow through to the downside, and likewise there's no point in trying to guess where the bottom is and go long from this level hoping that we're gonna hear some good news during the speech and get back to high of day. It's really just kind of sit on your hands and wait until something happens, until you see the market moving, and then you can hop into the momentum. Especially on days like today where there's high impact news. You just really don't want to overly anticipate these moves that are happening. 2 minutes till FOMC starts. So I'm going to quickly go to the bathroom because I don't know how long this is going to be. And I don't want to be stuck here. So I'll be right back. And we're back. 11:29. There we go. We're live. All right, let me cut the music. And let me get the volume up for the stream. All right. Let me know once he starts chatting. Let me know if you guys need me to turn the volume up at all. There he is, right on time. Good afternoon. I called it.
My colleagues and I
let me
remain
turn that up a
squarely
little bit.
focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated.
That's not what I wanted to do.
In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic
Look at that
activity
pump
has
up
been
on NQ.
expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low.
Immediate reversal.
Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000
All right, we're going to break the lows here.
A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth
Still
of
got
the labor
2.5
force
minutes on this candle.
due to lower immigration and labor force participation, though
15-minute
labor
chart
demand has
not looking
clearly
too hot
softened
right
as
now.
well.
We did just open this
Other
15-minute
indicators,
candle,
including
so
openings, layoffs,
see what happens.
hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that
Right back
total
up.
PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both
And
market
right back
and
down.
survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary
There goes
policy
gold off
actions
that
are guided
pivot.
by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
So they're
To
open.
conclude, the
They're
Fed
open
has
to
been
it.
assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Whole lot of nothing.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend.
See if
in addition,
pushing up towards 5,300
Supreme
here.
Court case famously, and I guess in 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick. 1 minute chart picking up some volume coming up here now.
Nick Timrose, The Wall Street
Getting
Journal.
rid of some of those gaps that we were seeing.
Generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
So he's really...
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you...
He's really doing a good job of kind of avoiding these questions that are kind of like gotcha questions, keeping that side of things private for right now. He's really about his business, if I do say so myself.
I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
Good question.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't, we don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
I mean, he is
Chair Powell,
right.
Mueller
These
with
are
Axios.
questions for other people.
Obviously, no SEP
but-
in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any
Really,
further
they're
rate
just
cuts
asking for his
is pushed back
opinion.
compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall a stronger
The
forecast.
chop is
It
real
really-
right now on
if that's your
NASDAQ,
question.
man. Look
I'm
at
not sure I
that.
answered your question.
But in terms of timing or pacing
This
of
is
any
where
additional
the
easing?
So we haven't made
the meeting started.
what we'd say about this was that after
We've
this
just been
meeting,
stuck in
after
this
the three
range.
recent rate cuts, we're well positioned to address the risks that we face on both
Which,
sides of our dual mandate.
I did
And we'll
mention it
continue
would
to
be
make our
choppy.
decisions meeting by meeting, based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly
he
stable.
hasn't said anything-
And inflation remains somewhat elevated. So
Sorry. He hasn't said anything overly bullish or bearish right now. So it makes sense that the market is just sitting here in anticipation, waiting to see if there's a question that gets asked that, sways the opinion. But for the time being, very neutral.
And if you look at the longer run, the S&P and the longer run rates, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. And maybe I missed by one, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range. But so for some people, they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision.
Gold is slowly making its way here.
I get what you're
Very
saying.
clean bounce off that pivot.
Some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell.
Is anyone
Amira
else
Buckley from
bored?
Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. we're not trying to articulate a test for
Take it
when
easy,
to
man.
next
Thanks for
cut or
tuning
whether
in.
to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that. And, we're in a position where, we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and
Cool.
the downside
Yeah,
risks
we're
to
live
to
every
ramp up
day.
both diminished a bit.
I go live every morning, 6:30 in the morning PST. Try to go live for about 2 hours, so we'll be seeing you.
Quantify them, and so there are different views on the committee, and we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain, but most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time
try to
price
short
increase.
this high on NASDAQ?
Most of the overshoot, if you
It's clearly
were
ranging.
to take that out, you'd get, and you would, inflation, core PCE inflation is running just a bit
With
above
my luck,
2%.
this would be where
X
it breaks
the
out.
effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That's will depend.
Tradeify payout officially approved. Took a max payout on my 50K funded account. Did I get a certificate yet? No. Probably not till they send the funds. But balance is now 85.58. So gonna try to run it back up these next 5 days. All right, NASDAQ going for that high. Gold is still on its way up. We are breaking out of this range here on NQ now. See if we get chopped back down.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made, you're right, we saw the labor market weakening, and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that. I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike.
All right. Been live for about an hour. Not too much going on in the market. So I think I'm going to call it here. Come back tomorrow. And we'll see if we pick up some volume, get some decent moves. Today was a tricky day, especially with the trade of 8 issues this morning. So I know a lot of people were blowing accounts out this morning for sure. For sure. Was able to lock in $1,000 on my Tradeify eval. Let's see. Locked in $2,000 last night on gold on this account. And then this is the account I just took my payout from. So didn't trade today on that one. We'll be back tomorrow. But yeah, pretty uneventful FOMC, I'm not going to lie. Really didn't see any reaction at all based off the rate decision. That was at 11 a.m. right here, this candle. So, like I said, saw a quick spike in volume, both directions, and then just kind of fizzled out and got stuck in this range for a little while. Trying to break out now, but just really not seeing that momentum in either direction in the market. So but exciting stuff. Took a payout on Tradeify today. Was approved. I should have the funds sent to my Rise wallet tomorrow. And then just rinse and repeat. I need to lock in 5 more days on this account. Gonna need to lock in. So this account hasn't updated on the dashboard. It will at 3 p.m. But I'm about $4,400 in profit on this account now with 2 trading days. So gonna need to lock in 3 more winning days on this account. And then these are evals. So see if we can get those passed this week. But that's about it for today. Appreciate everyone who tuned in. And we'll see you guys tomorrow.